Let's talk about compound journal entry. We know how to pass accounting entries, but sometimes what will happen, there will be two or more similar transactions. We'll have two or more similar transactions and that takes place on the same date. So the point is there should be two or more similar transactions and that should be happening on same date. Then what we can do is we can enter such transactions in the journal by what is known as compound journal entry. By what is known as compound journal entry, it is also called as combined journal entry. So understand, when you have two or more similar transactions happening on the same date, then you can pass the accounting entry through what is known as compound journal entry or combined journal entry. So only precaution what you have to take at this point is the total of debit should be equal to total of credit. So this is the only precaution that have to be taken care. Total of debit should be equal to total of credit. Let's see one small case study to understand. So let's take this case study. On 1st June 2015, Mr. X contributed capital of 50,000 and Mr. Y contributed capital of 70,000. So what we can understand is these two are basically similar transaction because both the transaction talks about capital, right? Both the transaction talks about capital. So what we can understand is it is similar transaction. And if you look at the date, it is happening on say 1st June. It's happening on 1st June 2015. So it is happening on a single date and the transactions are similar. So what you can do is you can go for compound entry for this transaction. So what's happening in this transaction? The business entity is going to get money, okay, from Mr. X and from Mr. Y in the form of capital. Okay, so money is coming in, that is cash is coming in. That is, if you try to identify what's happening, cash is coming in, and that's basically a real account item, and that says debit what comes in. Okay, it means your cash account should be debited. So that should be the entry. And who is giving, that is, what is the other side of the transaction? Mr. X and Mr. Y are giving money, so they are the giver of benefit. So we have another account called Mr. X account, then we have Mr. Y account. They are the giver of benefit and they basically come under personal account classification, and that rule says credit the giver of benefit. So it means their capital accounts got to be created. Okay, so keeping this basis, let's go back to the journal where we have to write the entries. What is the date of transaction? It is 1st June 2015, and what we understand is money is coming in, so cash account should be debited and two capital accounts should be created. Okay, so before writing the debit, let me write the credits because I have two credits. So I'll write to Mr. X capital account. What is the money contributed by X, and that should go to credit, it is 50,000. Then to Mr. Y capital account, the money contributed is 70,000. So what is the total money that had come into the business? If I sum these two, 50,000 plus 70,000, it is 1,20,000. So that should go to the debit in the name of cash account. So cash account should be debited, and that is nothing but sum of these two items. Okay, that is 50,000 plus 70,000, 1,20,000. So now we can give the narration being amount invested by Mr. X and Mr. Y. Okay, Mr. X and Mr. Y. So this is how a compound entry is done.